Hello and welcome to Crypto Weeklies. In this video, we are going to analyze the overall crypto market. None of the content financial advice. We'll look at what is happening in the market right now and offer machine learning and AI based insights as well as statistical background on what the market is looking right now. Starting with the crypto TLDR, the narratives over here again, all of these charts are available for free. This is my own website. This is the chart updated as of today. Uh, the narratives sourced from YouTube and Twitter related content generated uh, in major platforms over the last 24 hours is largely, again, overall sentiment is neutral, but large bearish narratives related to the flash crash. Also, how the crash is getting worse. So these kind of narratives, again, you can hover over here to see why the machine learning model has classified this sentiment as neutral, whereas some sentiment is classified as bullish and the others are bearish. So right now, overall, it's a neutral sentiment across the news. In terms of the bull market completion as well as the peak valley indicator, this model has flashed the end of the bull run where this risk levels has fallen below 20%, and in the blue zone over here, whenever the risks, this is the overall market risk of the crypto asset class, looking at the top 20 cryptos by market cap. Um, when this is in the blue region for a prolonged period of time, like it was, again, ignoring the couple of days in April 2025, like it was in 2024 and in 2023 and early 2024, as well as the entirety of 2023 and half of the 2022 year, whenever the risk levels are below 0.20, and essentially whenever they are less than 0.10, that means less than 10% risk, that's where the market has set cycle lows. So this is again still at around 18% overall risk. Did grow quite a bit over the last 24 hours when the risk grew from 12% to 16%. Now it's at 18%. So this number over here gets updated every day. Sorry, every 7 days, but these charts are getting updated every single day. So you can take avail of these analytics. You can see how this is calculated using volatility, alpha, beta, risk related metrics such as risk adjusted return and percent drawdown. Um, the last but not the least is, again, in terms of the individual narratives related analysis. What we have launched today is, instead of just focusing on the narratives as a standalone 7 day analysis of social media activity related to these narratives, right now the top narratives is investors related sentiment, the second is bearish sentiment. Over the last 7 days, you can see how the bearish sentiment has prevailed, and again, shorts related to Bitcoin are discussed. Even the altcoin sentiment has gone down over the last 7 days. You can see the longer term market attention since 2021 January. These are the monthly bars of the number of views on um, popular YouTube related channels related to crypto over the period of starting January 2021 till today. Again, the last completed month was less than 1 million monthly views. This is a longitudinal analysis, and the red line over here is the monthly comments. Whenever the views are going down, that means um, the social interest has gone down, and if it's coupled with rise of negative comments, or even, like, let's say, for example, in October 2025 there was a lot of attention with respect to the monthly comments on these YouTube videos. When that spikes and then goes back down like it did back in 2021 September time period, the market cap of major cryptos also goes down with it. And essentially the views peaked in May 2021, comments peaked in September 2021, and it was all downhill from there. Similarly over here, this time around, the views for the cycle peaked in December 2024. You could argue that if December 2023 is part of the same cycle but not quite the halving year, you could say that December 2023 had higher views, even April 2023 for that matter. But keeping the analysis only to the halving and the post halving year. You can see October 2025 provided the max number of comments, and that attention was garnered at that point. This widget at the top over here signals the overall social sentiment risk as of the last complete month, that is January 2026. Right now it's at around one third risk. That means the social sentiment risk has cooled off, but it's not as low as it is at the depths of the bear market, where you can see October 2022, for that matter, both the comments and the views were setting new lows as the market was cooling off, and the market finally cooled off in November, December. Typically, whenever the market has bottomed or is very close to bottom, there is a upsurge in the number of views as Bitcoin or major cryptos hit those bottom level and start recovering. There is a lot of attention, so those are kind of like false positives, but the views typically bottom just couple of months before the actual market bottom. So we haven't seen that yet, although this is February. We have only completed 1 week, and it's almost half of what January's activity was. So keeping a close attention on these to look for any longer term shifts. Over the last, in terms of the heat map, over the last 24 hours, although performance of some of the cryptos have been up, largely in the last 7 days, crypto as an asset class bled a lot. Over the last 30 days, same story again, barring Maker. Most of the cryptos were down over the last 30 days or the last 90 days. All of them were negative performance. Still, Maker held better than most of the other crypto. That's why it's the crypto of the day as of the performance across those time periods. Something new that we have analyzed and also kind of presented this time around is the crypto portfolio builder. Again, none of the content financial advice. This is analysis of the efficient frontier of major cryptos, like top 25 cryptos by market cap, looking at what their annualized return was since 2021, what was their volatility, what was the Sortino ratio, which is again score of return versus the downside risk, and also max drawdown as a indicator of how much they have lost at one point in time during the corrections of the bear market. So all in all, again, in this bottom left corner, top left corner are the gems of the asset class, which have had annualized return is great and annualized volatility is also low. Followed by that is this area over here, where things are highly volatile but also provide a decent amount of return. To the bottom left is the kind quote unquote bearish or kind of boring zone, where although the returns are at times positive, at times slightly negative, but they don't have that much of annualized volatility. They are at least not as volatile as these coins over here to the bottom right, which are quote unquote the danger zone, where the return is also low and volatility is also high. So looking forward to the risk profile of major cryptos such as Bitcoin, ETH, and BNB, these are some of the safest picks using these market cap weighted weighted mechanics of what these individual metrics are. What's their alpha, what's the beta, what's the volatility, what's the Sortino ratio, and what's the max drawdown. And comparative analysis of these looks at gives the insights on what's the composite risk score ranking for a crypto. This is an inverse of all of these individual individual stats, and it's normalized between 0 and 1. The lower the score, the safer the crypto in terms of the price performance since 2021. Although this chart particularly is not market cap weighted, so that means there could be cryptos which were less volatile and provided slightly more return than Bitcoin, but overall, as they are not market cap weighted, it still needs to be sorted out to create a gem hunter portfolio which is market cap weighted. But it's not equally market cap weighted. It takes into the consideration a square root of the market cap difference. So for example, if one crypto is valued at 1 trillion, like close to Bitcoin's valuation, whereas the other crypto is at around 10 billion, there is a delta of about 100x between the two cryptos. But this model considers only a square root of that difference, so as to uh, help discover some of the gems which are not at par with some of the higher cryptos market cap, but still are performing decently. And again, the invalidation or junk filter which is applied over here is two conditions. First, if the market cap is less than 5 billion, and if the drawdown was more than 90% since 2021, they are automatically disqualified. So the top 10 crypto and their market cap mix as a portfolio is provided as a recommendation, not a financial advice, just analyzing the price behavior and market cap related metrics. And if, let's say, if someone is interested is only top 5, you can toggle off the bottom 5 and, let's say, just provide a detail on what the top 5 should look like and what's the asset mix in the top 5, where Bitcoin is roughly 50%, ETH is slightly less than 20%, BNB 12%, 11% XRP, and 8.5% SOL. So this is how this weighting is calculated. This is something that we have launched recently, so you can check that one out. Apart from that, much of the insights related to the SMA analysis, again, this is something needs to be refined, but at a larger picture, what this provides is Bitcoin and ETH. Again, let's toggle only Bitcoin only. This is how Bitcoin is doing with respect to its 20-week simple moving average. Right now, the price has dropped quite a bit from the 20-week simple moving average, but ETH right now is holding better with respect to its 20-week simple moving average. ETH right now, if you check, the price is at around 2100. Um, the price is below 200-week simple moving average and the 300-week simple moving average, but still, with respect to the 20-week simple moving average, which is the 20-week simple moving average is at around $3,300. Price is $1,300 less than the 20-week simple moving average, whereas Bitcoin over here is at around $69,000. The 20-week simple moving average is at around 96k. The difference is, in terms of percentage, is slightly less than one third difference. So this is how the asset mix is calculated with respect to the 20-week simple moving average. Price risk, whenever both ETH and Bitcoin are less than 20% risk, like they are right now, typically the asset class has cooled off enough to look for any DC opportunities, not financial advice. So as we move into the middle of first quarter of 2026, the overall asset related risk and reward can be summarized by using, let's say, regression based interpretation of what the fair value is. Starting with Bitcoin, the regression based fair value is now at around 73k. Price is up almost 12 to $13,000. Sorry, 79k. Price is about $10 to $13 lower than the fair value at this point. That means price has had the first major bear market drop, like it did back in 2022, June 2022, where the price for the first time fell below the fair value. But again, there was one more subsequent drop before the risk levels were to go less than zero point 0.2. Whenever this goes less than zero point 0.2, if and when it goes less than zero point 0.2 risk, that typically is, again, if you ignore the noise over here and just look for any DC opportunities whenever the regression risk is less than zero point 0.2, essentially one of some of the best time to DCA. If you have slightly more risk tolerance, less than zero point 0.3, still not as bad as the euphoria phases where the price has gone off the fair value and is in what you can say, quote unquote, distribution zone. So that is something still yet to be seen in terms of how Bitcoin does. Right now, it's the fourth best time to DCA BTC per this analysis, at around 0.36 risk. How low can the price go? Again, the price can do whatever it wants to do, but per the regression based fair value estimation, a zero point 0.1 risk or 0.2 risk for Bitcoin as a forward looking model. This is not as of today, in the future 6 months. This is the projected regression based fair value, and from this distance, a point 2 risk for BTC is just over 60k. The 0.15 is at around 50k, and point 0.1 is at around 40k. So those are the three values, again rounding them off: $40,000, $50,000, and $60,000. Those are the three values established by this regression based fair value function. Overall, last but not the least, estimating the bear market bottoms for BTC and ETH, identifying if they are significantly close to the time weighted average price, which is again how long they have spent at some of the key level. Typically, Bitcoin does not spend any significant time below the time weighted average price, but if it comes very close to the time weighted average price, that 10 to 20% difference between the price and the time weighted average price, where the regression risk or the time weighted average price risk goes to this cyan or blue color region, is typically when the price bottoms for the bear market. So we haven't seen that yet. So typically, if the price were to bottom at around 42k, that would be slightly above the time weighted average price. If there is a recession in the market, there is a chance that Bitcoin spends some time below the time weighted average price as well. Accounting for that worst case scenario, the recession case for Bitcoin is around 50% lower than the current price. The base bear case is around 40% of the current price. And for ETH, it's similar. The drawdown is much less severe than Bitcoin from now on, as the price of ETH is very close to the time weighted average price. But with ETH, what happens is that price does bottom out. Like for example, in 2022, around the time weighted average price, ETH is only $100 away from the time weighted average price at this point. So that uh, that could be a point to look forward to in mid to late 2026, as the bear market kind of matures and how ETH performs with respect to the time weighted average price before concluding what its bear case would be. With that, I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day.